Okay, mute your mic. We start. Yeah. So today we are going to talk about now when to buy, when to sell, when to exit the market. Remember, we talked about all the introduction about how to buy, how to sell. Are we? What are sellers? Who are sellers? Who are buyers? We talked about that. You studied about those candlesticks. So today let's talk about when to buy, when to sell. I don't know if there's any other challenge so far. Okay, so when to buy, when to sell. Did you try to open your to open gold the way I we opened yesterday? Did you go through all these processes? Okay, so let's start today's session. Now we talked about let's talk about when to buy, when to sell. Now, the first step is before you take any trade, before you decide when to buy, when to sell, we do something we call analysis. We analyze the market to know, is this the right time to buy? Is this the right time to sell? That's what we analyze, and that's what we are going to talk about because I do direct sessions. I don't do many or much theories. So let's see how we can try and trade before Friday. So the first step, we are going to look at three different strategies. Four, let me say, we are going to look at consolidation. We are going to look at support and resistance. We are going to look at the fib. We are also going to look at fair value gaps, something we call fair value gaps. Then from there, we are going to look at the RSI, and this under a category we call the moving average. That's what we are going to look at. So all these five topics, before end of those five topics, you'll be able to trade on your own. Before we complete those sessions, you'll be able to trade on your own. So let's start with consolidation. Now, the market has three different moves. So every day we'll be tackling one of them, though I'll be also giving you some assignments to do. So before all that, let's talk about consolidation. Now, the market moves in three different ways. There's a down trade, there's the up trade. You remember that? And we say this down trade, when the market is pushing down like this is a down trade, and this is up trade. So when the market is moving up, we say this is up trade. A down trade, this is the going down, this is down trade. We say this market is dominated by sellers, so we sell when the market is going down. Now, the other item we said we call this a bull bearish market. Okay, and the candles are usually in color red. That's the first step. Okay, now, second option, we said the market moves, this we call it the up trade, and this is dominated by buyers. So we buy when the market is going up, and this we call it a bullish market, and this is dominated by green candles. So you'll see the candles in green. That's the second option. Okay. Now, why do we sell when the market is going down? When do we buy when the market is going up? Remember, in Forex, we make money out of the changes in the price. Please mute your mic. We make money when the price difference in the prices. That's when we make money. For instance, when the price, some people say we sell high, we sell low, and we buy low and we sell high. When the market goes all the way up like this, we expect to sell. When the market moves all the way down here, we expect to buy because that market will reverse and change direction. Now, in a very, very simple terms, we can say when the demand is very high of the commodity that we are trading, when the demand is too high, we do what? We buy. Now we sell when the demand is too high, we sell, and when the demand is very low, we buy. For instance, let me give you an example. Let me give you a very nice example. Now, after when you buy during Christmas season, during the Christmas season, when there's a lot of demand from the travelers, when you want to travel to the village, when you want to travel to Kisii during Christmas, the fare is usually extremely high. Sindio? So when the fare is extremely high, the fare is usually high during Christmas because not because it's Christmas, but because there's a lot of demand from the what? From the buyers, the travelers who are traveling to guys who are traveling to Kisii. There's a lot of demand. So there are so many guys who are traveling, but there are uh very few cars. So what happens to the drivers? They hike the prices because there are so many people, but the cars are few. So what happens in January when there's no one who wants to travel after guys return to work? What happens in February, March? The fare is usually very low because there are no guys who want to travel to Kisii. No, there are very few guys who want to travel to the village. So when the demand is very low, the price goes down. Just like any other market. When you go to Eastleigh Christmas, bei ya manguo ziko juu during that time. The prices are very high. But in January, February, the prices are very low because there are less people. So when there is less demand at this time, when there is less demand, the price goes down. But when the demand is very high, bei inafanya nini? Wanapandisha bei. So that's what happens to the buyers, and that's how we make money. So if you predict, not really predict, if you analyze the market and see this market is going up, we make money when we follow the trend. So kama market inapanda juu, we also do what? We also take a buy. Okay, this is when we buy. Kama market inaenda chini, this is when we do what? We sell. So we do not follow the. Some people confuse this with stocks, where they say now the stocks have really gone up, so let me sell. The stocks have really gone down, let me buy. Shares zimerudi chini. Now this one does not work like that. We follow the trend. Kama stock tunaona bei inaenda kuanguka, we also sell. Kama bei tunaona inaenda kupanda, we also do what? We also buy. Okay, so we follow the trend. But if you go against when the trend is going up, then you decide to take the opposite. What happens? You're in losses. If the trend is going down, then you decide to go up, you are going against. What happens? What happens? When you go against, you lose. So you have to follow the trend. So we make money following the trend. If the market shows us this is now time to buy, and we buy, the market is going up, we are following the trend, we make money. If you go against, you decide to sell when the others are buying, you do what? You lose. Okay? So that's about now how we make money. So in our today's session, we'll not talk about the uptrend and the downtrend. We'll talk about the uptrend and the downtrend in the next session. But for today, we want to look at the other different move outside when the market is bearish or the market is bullish. Okay, there is another time when the market is just ranging within the same region. Okay, the market is not going up or the market is not going down. So what happens at this region? We say this market is consolidating. So in a consolidating market, that's what we are going to look at right now. Or we can call this a ranging market. So a ranging market does not have a clear move. A ranging market does not have a clear move. Okay. So when you say a ranging market, a market is ranging. The market, normally what we see how the candles move, you'll always see candle move up. When you buy, they sell. When you sell, they buy. When you buy, they sell. When you sell, they buy. Okay, you see the market moving at a straight line like that. Remember, we said a downtrend is when the market is going down. You'll see a pattern which is going down like that. When the market is on an uptrend, you see the pattern moving up like that. But when this market is neutral, when this market is just on a straight line like this, the market is not going up or down, we say this market is consolidating. And that's what I want us to talk about today. A consolidating market. How to identify a consolidating market. Now, a consolidating market is one of the worst market you can find yourself in. Anytime you see a consolidating market, a ranging market, I always tell my students to avoid that market at all costs. Because during that time, the market does not have a clear move. Okay, the market does not have a clear move. When the market is ranging, it doesn't have a clear move. So what do we do? We sit back and wait for the market to give us a perfect what direction. We wait for the market to confirm if we are going up, or we wait for the market to confirm if we are going down. So you have to wait for that market to give us a clear direction. That's what we do during consolidation. So how do we identify consolidation? For instance, let's see those three major moves first before we go out to identify the consolidation. For instance, this, you can see this is an uptrend. You can see this is a downtrend, uptrend, downtrend, uptrend, downtrend. Then you can see this market is consolidating. Then you can see uptrend, downtrend, some sort of consolidation, then downtrend, some sort of consolidation there. Then there's uptrend, downtrend, uptrend, uptrend, downtrend, uptrend, some sort of consolidation. Then there was a downtrend. Okay, so anytime you see candles just within the same range, unaona candles ukiona zikiwa kwa straight line like this is what we call a consolidating market or a ranging market. Remember, you have to make your candles big. For you to make your candles big, you click here, this right side, you drag like that. Una drag juu na chini, like that. That's how you expand your candles. If you want to widen your candles, una click hapa chini. I'll talk about this when you are talking about the next session. You drag like that. That's how you can make your candles big, or wide, or narrow, in simple terms. So let's identify another consolidation. Look at this one. Is this consolidation? This is a consolidating market. So what do? We highlight this entire consolidation like that. Another one, you can see another consolidation here, another consolidation here, another consolidation here, another sort of consolidation, another big consolidation within this region. So that's what we call consolidation. The market does not give us a clear direction. I don't know if you are getting. So for us to know this is a clear market, you'll see a downtrend like this, an uptrend like this, a downtrend like this, a downtrend like this, uptrend like that, downtrend like this, uptrend like that. So that's how you can know this is a good market, when you see these all these clear moves. But anytime you see candles just playing within the same region, anytime you see all these candles playing within the same region like this, that's when we say this market is consolidating. Look at all these consolidations. Look at all these. another consolidation. So that's how you can identify a consolidating market, uptrend and a downtrend. Now, so how do we trade now within this consolidating market? How do we now know after this consolidation, where is the market going? Because after consolidation, anytime you see a consolidating market, just know after that, after the end of this consolidation, anytime you see a consolidating market like that, after all that consolidation, after all these games, there must be a breakout. The market must go up or the market must go down like that. So ukiona consolidation, just know, just prepare for anything. Know after this consolidation, the market might take any side. The market might take any direction. So you have to be very careful so that the market might not find you in the wrong side. Otherwise, if the market finds you in the wrong side, then obviously you are going to lose everything. I don't know if you are together. We are together. Okay. So let's talk about how we can now see when to buy, when to sell. So I want to talk about something different about the candles. Candlesticks are very different. We have uh, the green and the red candles, but inside the green and the red candles, we have the candles have a meaning, and that brings us to the topic on different candles. We learned about all those candles. I told you to learn about those candlesticks. Now, today, let's talk about the parts of those candlesticks because the candle has some major parts which you have to be very careful as a trader. I always tell my students to be very careful looking at those candles. So, parts of a candlestick. So, when you see a candlestick like that, it has three major parts. The first part is this area. We call this the body. This area we call it the upper wick, and this region here we call it the lower wick. We have the upper wick, the body, and the lower wick. So anytime you see a candle, just know it has all these three parts. For instance, this candle which is forming right now, you can see it has this body, it has this wick, and another wick. Let's see this one. You can see it has a smoke wick. Iko na kamkia kidogo. There's the body, then there's another lower wick. Okay, another one, you can see this one, body, wick, body, wick, body, wick, wick, body, wick, wick, body, wick. It doesn't matter the size of that body. So when you look at a candlestick, it has those three parts, and those parts play a very key role when you are looking at the consolidation. Because anytime I see a consolidation, I know consolidation is the easiest um, approach you can ever find in the market. Trading a consolidating market is the easiest one because you just need to be patient. Just need to be patient. Wait for the market to give you a good setup. Wait for the market to confirm if you are going up or we are going down because we can either buy or we can either sell. We have those two options only. We can either buy or we can either sell. Those are the two options. So during consolidation, we wait to see if this market is going to sell or this market is going to do what? To buy. So what we do, we wait for the market to give us a confirmation. Okay, wait for the market to give us a confirmation so that we can know if we are going to buy or we are going to sell. So when you're identifying consolidation, we look at the wicks. We look at the bodies, not the wicks. We look at the bodies of those candlesticks. So for instance, if this is the body of a candlestick, this is the body, this is a candlestick, this is another candlestick, this is another candlestick, and it has wicks. It doesn't matter how big or small those wicks are. It doesn't matter. Let me see. It has a big wick like that, small wick, big wick, small, big, small. You see, it doesn't matter the size of that wick. Okay. So when we are looking at this consolidation, we look at the body only, where the body is ending. So if this is the highest part of that body, if this is the highest part of that body, that's what we are going to look at. So we mark consolidation, that area of the body. Forget about the wicks. We'll be looking at the wicks when you are looking at the other strategy. We are going to look at the wicks when we are looking at the other strategies like the support and resistance, the liquidity sweeps, the fair value gaps, all those stuff. But for today, during consolidation, we are going to focus on the body. So ignore all these wicks and look at where the body is closing, and that's where we mark as consolidation. For instance, let's see I want to look at a very clear consolidation. Look at this one. You can see this market is ranging within this region. So how do we mark the consolidation? We look at the highest part of that consolidation. You can see, and the lowest part. So that region, that's where the market is consolidating. That's where the market is consolidating at. Any question? Let's look at another consolidation. Look at this. You can see the market is consolidating here. So how do we mark? Mark the highest point and we mark the lowest point of that consolidation, like that. So that is what we call the consolidation. Sijui kama tuko pamoja. Okay. Okay. Let's look at another consolidation. Another one is here. So for us to mark this consolidation, we mark this highest point and this lowest point. Another one is here. Highest point, lowest point. This is consolidation. So that's how we mark consolidation zones. So for now, because uko job, I don't want to take much of your time. I need you to open the chart, go to trading view, open gold, then try to identify this consolidation, all this consolidation, because we remember we are just doing practicals. Anytime we learn something, we're going to take very serious practicals. So for us to proceed, I need you to open your trading view, open gold, the chart, identify this consolidation, then you send me a screenshot. I'll be marking your assignment anytime. Okay. So I need you to open trading view and identify these consolidation zones. You can also identify the down trade like that and the up trade. For you to draw, make use of these tools. This is the tool first I want you to make use of. The others I'll introduce to you in the evening. So you use this brush, click the brush, the first one, the brush, then you can now draw. You just drag like that. You can draw. So I need you to draw the down trade, the up trade. If you want to write, you can click this text, then you can type down trade. You can just write DW. Up trade, you can just write UP. Okay. For consolidation, you can just say core or course like that. So this is the tool that you use, this one. Let's draw using this tool. And the second one, use this text so that we can type and see. You can name it. So I need you to name the consolidation, the downtrend, and the uptrend, so that I know if you are on the same pace. I'll be uploading this video on YouTube so that when you are free and you've not understood, you can always go back and, yeah, refresh your mind. Sawa sawa. So once you identify like that, you send a picture, take a screenshot, or to take a picture using your phone and send it to me so that I can know if you're on the right direction.